Hi there traders, this is Steve Miley, the market chartist for FX Explained, and here we're looking at the major currency pairs here as we once again enter the Forex zone, and we take a look at the major currency pairs: Euro, Pound, Canadian Dollar, Australian, New Zealand and the Japanese Yen, all against the US dollar in here. So starting off with EUR USD, Euro versus dollar, a resilient consolidation theme in here. Have the market having spiked up earlier this week up through the important 110.97 swing high. We'd previously head faked above this 110.92.93 area up to 110.97, but a really strong start to the week, a really strong rally to begin the week, having head faked down here through 109.88 down to 109.80. The market rejecting that fake breakout, that fake out down to 109.80, and now breaking above 110.97 up to 111.16. Then a resilient consolidation over the last 24 hours and pushing back higher, and we see all the risks now for 111.16 and 111.40 into today's key US employment report, and then maybe even as high as 111.76.83. It's going to take a breakdown through this 110.65 to 110.53 area to shift the outlook to more negative. Let's take a look at the pound in here now versus the US dollar, and if we look at cable, a strong breakout, some positive opinion polls for the Conservative Party through the middle of this week has seen a breakout for cable for pound US dollar up above this multi-month peak in here at 130.13, having been reluctant to even go and retest 130. We're broken through 130 and 130.13, accelerating higher, running some stops up there, and that all leaves the threat now to the upside, looking for further price action, maybe through 132 and higher towards 132.12 and maybe 132.63 today, only down through 131.20 signals a more negative tone. Let's take a look now at the US dollar versus Canadian dollar. And here what we'll see is this more aggressive negative theme in here for dollar CAD that we saw after the BOC meeting on Wednesday and the Bank of Canada meeting, sending the market through 132.51, and then more recently on Thursday down through 131.86, 131.76 supports. An important negative shift. Remember, this dollar CAD sell-off was driven by Canadian dollar strength, that Canadian dollar strength coming through the perception that the BOC outlook was less dovish, de facto more hawkish, so a slightly more hawkish tone from the BOC, the Bank of Canada, sending the Canadian dollar stronger, dollar CAD lower through this important level here, 131.54 the downside risk, and maybe as deep as 131.07 today, above 132.03 through the US employment report in here, and also Canadian employment report only through there will signal a more positive tone. Let's go and look at the antipodeans now, the Aussie dollar and Kiwi dollar. A firmer tone in here for the Aussie dollar at the beginning of the week in here, surging up through these trend lines. Also resistances here, 68.34.41, just stopping short of this critical level with earmarked at 68.65, just prodding at the retracement here at 68.61 up to 68.62. Yes, we've had a dip, but then we've had a solid rebound from 68.09 over the last 48 hours or so, and we're looking for upside to challenge not just 68.62, the recent high, but that critical 68.65 level. Only through 68.09 would be more negative. And if we look at the New Zealand dollar surging higher, I think at least 5, 6, 7 straight up days in here for the New Zealand dollar. A really strong breakout since the push above this peak here at 64.66. That leaves the threat still very much higher. We're sat right below the current cycle high here at 65.62. Upside through there we have at 65.74 and 65.91. On the downside, it's only through here at 64.99.91 would the theme turn more negative. And finally, we're going to finish off in here with the US dollar versus the Japanese yen. So on the bigger picture chart, the market kind of retaining this kind of uptrend. But however, the sell-off that we saw early this week, we've had two significant impulsive sell-offs. And despite this slight rebound, the market capped off at 109.21. And we do see downside risk for dollar yen, maybe to 108.40 and 108.25, with 108.22 the critical level, and even more important, 107.87. Downside threats to these lower levels above 109.21 today is needed through the US employment report to signal a more positive tone. This has been Steve Miley, the market chartist for FX Explained in the Forex Zone. Join us again soon. Until then, have a great trading day and don't forget to follow us on our YouTube channel. So traders, don't forget to catch us again on the Forex Zone, and also check out all the great content on fxexplained.co.uk.